earnings today is Edgewell Personal Care. The company behind brands like Banana Boat and Schick razors is tweaking its products to maintain profitability. Joining us now is Rod Little, Edgewell Personal Care President and CEO. You think about where the consumer is today, Rod, and what are you navigating when you look at a whole consumer base that needs to buy razors and sunscreen but is feeling pinched right now?
Yeah, good morning, Sonali. Good to be with you. Look, the consumer is under some pressure. We talked about that last quarter. We saw some overall slowing of the growth rate of our aggregate categories that we play in here in the United States. Past 52-week average, those categories grew at roughly 2%. Last 13 weeks, so last quarter we just reported, it was about flat. So there is a little bit of sequential slowing. I think our view is it did make some sense, right, when you look at what's happening around us. The basket around food has gotten more expensive. People are still prioritizing entertainment, leisure, and travel. Housing's expensive. If you own a home and you're insured, the insurance rates are going up, not down, quite significantly in some cases. And so with that, consumers have the income they have, and they're making choices in the everyday basket, just looking for value, and looking for those brands that provide that. We actually have brands that provide good value. We're not up in the premium price tier. Value, kind of everyday fair price brands that deliver on the promise they make. And so in many cases, we're advantaged by that. Sun Care, for example, Banana Boat, Hawaiian Tropic, value-oriented price brands deliver a great performance, and consumers are sticking with them. If that price value equation's out of balance, now is when consumers are choosing not to buy you. And so that's what we're seeing.
Are these brands really more staples than discretionary? If we go into a recession, Rod, people are still going to need to wear sunscreen or put it on their kids for sure. Or is it like a luxury thing because you use it more often when you can afford to go on vacation?
Yeah, our brands are primarily everyday use brands, less discretionary. And so Fem Care, tampons, pads, liners, that's core to the women's routine. Those are everyday use products. Shaving, people grooming, we have with a grooming leader here with Jack Black, Bulldog, and Cremo. Guys are going to take care of themselves regardless of if there's a recession or not. As you then start to get into sun and skincare, that's where it gets a little more discretionary for us because our brands are occasion-based. And so if you think about Banana Boat, Hawaiian Tropic, you use them when you're out for a walk, playing golf, at the beach, at a pool. And it's those moments when you're outside and having some fun where you're using our brands. The good thing is for us, that's happening more often. COVID taught people that it's good, it's safe to be outside. I think with all the mental health issues we see today, being outside, being active is good, it's a positive. And more people are wanting to take care of their skin and playing for longevity. And the number one thing that ages skin is sun exposure, right? So awareness is up as well. And so even though they're more occasion-based brands, we're seeing it play more and more like everyday use as it comes to SPF.
But it's interesting, even though you have some of these products that people would go back to buying every month no matter what, some of these products are where you saw a little bit of weakness, for example, in the razor blade category. Why is that? And do you see people even trading down, going from, say, kind of a nicer item to a 12-pack or something where they can kind of get a little bit more bang for their buck, even if the quality is traded down?
Yeah, razors and blades, Sonali, you went right at the category that's most under pressure and declined about 3% total category here domestically in the U.S. last quarter. Outside the U.S., we're flying in razors and blades, and we're not having the same issues we're seeing with consumers or the level of competitive intensity that we see here domestically. So including Canada and outside the U.S., it's fine. In the U.S., highly competitive category. In the women's space, for example, it's very crowded. Lots of brands, lots of disruption happening in the category. The leader is being very price promotional and very focused on price as a response to that disruption. But what you're seeing happen within the category, while it's down overall and our market share is down in the quarter, there's some transitory things happening with shave preps that's impacting us negatively. But you're seeing value win. And so our Billy brand, which is a value-oriented price point brand, was up 180 basis points of share in the quarter. We're at a 16 share in Walmart now with that brand. We're over a 10 share national, and it's growing share period on period. Part of it is it's an amazing brand. There's great performance with the shave quality, and it's priced in that value price point tier. So we do think we're catching some consumers who are looking to trade down, if not for private label, at least to a value-oriented brand play.
The stock, Rod, was punished in yesterday's sell-off. I guess just as the tide drops, so do all boats, right? But a lot of that came from the trigger of the non-farm payrolls number and worry about the U.S. economy. If the Fed were to cut rates, 50 basis points, 75 basis points, we think about home sales and car sales. Does it help you as well? Would you like to see the Fed cut rates?
Yeah, I would personally. I think it's well documented that it feels like that's coming, that's baked into the projections now. I do think that will help us. Look, as we talked, the basket's expensive. So anything that gives consumers some slack would be helpful to us as we just think about consumption more generally. And so, look, I think we set up fairly favorably as we go forward. We've got some easing of the commodities basket. The dollar's weakened here over the last couple of trading days, certainly versus the yen. Japan's our second largest market. We're very exposed to the yen. And so for us, as we look at the future and look at kind of where the commodities basket might go, cost of inputs and labor and wages, with a rate cut cycle now potentially starting, I think that sets up quite favorably, not only for us, but our industry in general.
Rod, one of the things I've noticed lately in buying staples for my family is that I do a lot of that shopping on Amazon. And when I go on Amazon and look for low dollar cost opportunities, they're always straight out of China. What is Chinese competition like for you, and what do you think about Amazon selling so many Chinese goods to the American consumer?
Yeah, it's very limited for us today, Matt. We play in categories where performance really matters. Quality of the products that you use in your daily routine matter. And so FemCare, for example, it's a regulated category by the U.S. government. We take that very seriously in terms of how we play in the category around health and safety. And women typically are not going to compromise in that category. You have to have products that consumers can trust. Razor blades, when you've had a bad one on your face, leg, or armpit, right? If you're a consumer, it's very, very obvious. And what we see is people go for trusted brands, even in tough environments. And we have those brands in our portfolio. We don't have, big problems with Chinese competitors or other competitors that play at low opening price points, for example, because consumers are still looking for value, and that's a combination of price and quality. And we fit very nicely in that value range because, as I said earlier, we have well-priced products that are very efficacious and deliver on the promises we make.